Yep, yep.
JB, we're back.
We're here again.
We're back.
Another episode.
Another episode of Don't Shoot the Messenger. You heard it here first.
Oh,
man.
shoot, the messenger.
So look, let's jump straight into it. I think for this week we need to get into the economics of AI.
Absolutely.
And for the first topic, we really want to start to unpack in the next level of detail what is the share of the return of AI going to look like across the different players in the market.
Mm-hmm.
We're seeing billions of value being created over months, trillions over a year or so. What is the mix of that return going to look like across the different players in the market? And what will that mean for you and me? I mean, so I think I was thinking about the framework for this, right? When we've talked a lot about AI infrastructure, I think there's probably 3 layers that matter, and really we need to zone in on 2 of them. You got who can produce the most power, electricity, land to, be able to have the capacity to deliver AI at scale. It's probably layer 1. At layer 2, you've got really the compute layer. So have you actually got the chips, memory in the chips, data centers to be able to, power and use these AI models for good.
Yep.
And then, of course, the third layer is the actual models themselves. Everyone knows OpenAI, everyone knows Anthropic and what they do. When you think across those 3 layers, what is the proportion of the return going to look like? How is it going to be distributed? So I think there's an interesting conversation happening right now around the price of AI. So let's start there, right? The prevailing thought broadly is that the price of AI is going to reduce over time as there's more abundance of supply. So, you have China entering the fray, producing their own models, having an abundance of compute, having an abundance of electricity and energy.
Yeah.
That will be able to flood the market and make models cheaper, make the price of AI cheaper. It feels like an economics 101. For most people, that's a relatively rational argument. That's not too hard to get behind. But this week, our good friend Dwarkesh, he put a different idea out into the market, and it got people thinking, what if the price of AI actually increases? And he had a few data points to kind of underscore why that might continue to happen, as it has been already. And what needs to be true if that trend is to continue. So I guess my question to, unravel and simplify to an extent there is, when you look at how the market has gone so far, where do you sit on the spectrum of, AI being effectively a commodity where the price of it will reduce and the margins across the layers of AI will reduce, versus actually this is something where it looks like the value is increasing over time, and as a result of that, the prices and margins are going to continue to increase as well?
I think I saw the podcast and he had a very interesting perspective, because that was not an angle that people were looking at it from, really. And he was basically trying to compare it and say, like, people feel like, okay, once there is a lot of labor, generally, like there's a lot of labor, then it generally means that prices are going to crash. But then he was trying to say essentially that this is not always the case. And sometimes more labor might also mean like there might also be more demand. And he was saying in the case with AI, like, and basically the current trend we've been seeing, that because there is like a lot more demand, it would still keep the prices like going high. But I'm not really sure that I mean, I see what he's trying to say, but I don't think that's really sustainable. And I think the reason is because while you can say, okay, you think like there might be more like demand and like it might keep going higher and higher, I think at some point you're gonna have the open source models are gonna come and flood the markets as well. And I don't really see how the frontier models keep that chokehold. I think it's gonna get commoditized eventually. And once it's commoditized, it becomes like a race to the bottom. Obviously, like everyone needs to then, because currently, as you can see, even from the what he mentioned, the price that Anthropic is charging has actually multiplied in the last year. And you can say, okay, that means the price will keep going at this trajectory. But it also means there is a lot that they are taking advantage of right now. And it means there's a lot for it to come down as well. So like they've decided, okay, you know what? We're gonna just increase our prices because compute is scarce and like people are gonna pay for this. Like the hype is currently here right now. We're gonna increase our price, like people are gonna pay for this. And you might see it that way, but you can also see it as okay, they have taken massive advantage of this, but is that really sustainable? Like, are frontier models going to keep being like as coveted as they are? Like, would the models are going to get to a point where for everyday people, for most tasks that you do, you don't necessarily need like a Mythos or something.
Yeah.
And the open source models, I was saying that there was I don't remember the Chinese model, which apparently I've not tested it myself.
Allegedly.
Allegedly, is getting I think 90% of what Mythos will do for I think about 10% of the cost. And so when you say that, you would say like once anything China steps into, like they find a way to raise the price down. You see electric cars and everything like that. So I really doubt that, and also because like when use cases are exploding, if use cases are really exploding as we expect them to, people need to be able to, people are going to go to what they can afford. Like if I have so much more I want to do, I wouldn't say, you know what, I'm only going to do 2 things because this is what I can afford. I would still want to do 10 things and I would use the model that I can afford to do, especially if it's actually good enough. So I see that as being the path to the frontier models realizing like, okay, we need to start dropping the prices. I guess the other thing is like, okay, maybe the models get banned, maybe then that's like other spanners you can throw in the wheel and then like it's not very certain anymore. But if the US bans it, every other country is going to use it still. So yeah, that's my take. I don't think it's going to keep going up that way. They've been able to do it so far successfully, but I think they're going to get to a point where because people want to do so much more, people are going to have to find a solution.
Yeah, and really we're going economics 101 really, right? Because we're for this segment, obviously we're focusing on the price, and I think obviously the other vector we're gonna have to come to later is the volume, right? On the price side, there's a few things that I think are a little bit unique about this market versus prior transformations and prior innovations. When I look at the market that we have today, the intensity of the choke point and the scarcity seems to be increasing over time. So one of the questions at the minute is, how is it possible that, and let's just use Anthropic as they seem to be, the kind of, you know, ultimately they're the barometer of where we are with AI right now.
Yeah.
How is it that they're only able to increase their compute, so effectively their capacity to deliver AI, by 3x, but their revenue is able to go up by 10x? What that is, as a data point, right? So when they're going, they've only got, you know, an extra few gigawatts of power to be able to deliver, or powered compute to be able to deliver the AI, and yet their revenue is going 1 billion to 10 billion, and it looks like it's about to go 10 billion to 100 billion next year.
And they were already running at max capacity.
Exactly.
So it's not a thing of maybe there's just a lot more, like
exactly,
a lot more usage.
So with that, with those things that we know to be true as facts, you've got a very hard data point there that so far being able to increase the price has not been a problem.
Yeah.
And then there's a question underneath that of how much of that increase in price are they retaining as their own margin versus how much are they just having to pay to the actual compute providers, so the providers of data centers and chips.
Yeah.
Because we also know that the price of compute and the price to rent out, you know, GPUs, rent out the chips for AI is increasing as well. You know, you look at the spot prices, you know, it's going up maybe kind of 40% since April, I think was the data on that. So again, you've got another hard data point that suggests, okay, prices are going up pretty steeply. You know for sure that their cost base on the compute is probably going up, maybe 30-40% over the
Right.
last few months as well. So we won't know the exact kind of split of that margin, but we also know that Anthropic's gross margins in general have gone up from kind of low tens to, in some reports, upwards of 70-80%.
Mhm.
So you've got a fairly solid data point that suggests they're able to retain a lot of that margin. Yes, the cost base is going up, but it seems, relatively, believably, that they're able to retain most of it.
Yeah.
And then, of course, you have the third layer, which I think Dwarkesh outlined well as well, which is what also about the monetization of the compute as well. So they've got a certain capacity, whether let's say it's 2 or 3 gigawatts. Are they finding better ways to capture revenue on each gigawatt of compute as well? Which I think is a little bit harder to measure, and it's a little bit harder to find a data point that proves, but it is another factor that we can look at. But effectively, when you put all of those data points together, you've got a fairly solid bull case that actually it looks as though they're commanding higher margins over time. The scarcity on the compute is actually increasing. And even though their cost base is rising, they're able to increase the price by more than the cost base is rising.
Yeah.
So the question then becomes, can it, how can it continue? Can it continue? And I just think, for me, you mentioned around, the supply side, China flooding the market, prices coming down. I just look at it again and I start to think, you have a question of, yes, the number of users, and you have a question of how much is each user, what's the frequency of their usage. I believe that there will be a big segment of the market that is open source and cheap.
Mm.
But I also believe that the frontier capability is going to massively multiply the amount of frequency and usage that we use AI for. Because when we get to a point where, you don't have to do all this kind of hacky stuff to get it to work, spend an hour prompting and getting it to come back and actually work and all this debugging so that it's actually just smooth. When we get to that point and anyone can just create amazing products just by talking, I just can't see how the frequency doesn't increase by more than the supply. So with that true, and with that segment that is kind of reserved for frontier capability, where it's able to do things that you will pay more for because you couldn't do them before and there's not another model that can provide them. As long as that's true, I don't see why the margins can't continue. I mean, there's an upper limit on how much margin they can get, but I don't see why the revenue and profitability for the model layer can't continue to increase.
So you're so expecting that, like, there'll be so much more demand that even though there is like open source models, and even though people are using more open source models, Frontier would also keep increasing as well. And either way, they will still be able to increase their prices.
Here's another way. And I'll ask this as a question, right? I think most people, kind of, even Elon with his own ambitions and projections, reckons that at an absolute stretch, maybe we can 5 to 10x our capability in terms of gigawatts over the next 10 years, maybe. So if I zoom out completely, do I think that demand, particularly for the higher end, higher margin, more complex use cases, is going to increase by more than 5 or 10x? I mean, we're looking at vectors of 100 or 1000x.
Yeah.
So when I look at it historically and how these transformations have gone on the adoption curve, I think that, as I said, it goes back to the level of scarcity that we actually have in terms of the power to compute. I don't think it's a foregone conclusion that prices are going to reduce.
I guess that makes sense, because also if you look at it, it's like, while you can say, okay, models are being subsidized, if usage does like 1000x or something, how much can they really subsidize it? Like at some point, it wouldn't be feasible to keep subsidizing at that scale, and prices are just going to naturally go up regardless. So it'll be interesting to see. And even just to the point that you were making about how prices are increasing, I heard that recently SpaceX and Anthropic and Google are paying ridiculous amount to use compute from SpaceX. So that proves how much the actual cost for even Anthropic is increasing, and regardless, they're still able to make such margins, which is crazy.
Yeah.
It's crazy to think about.
Yeah, it's another
Yeah.
hard data point.
Yeah,
Yeah.
because I think they were paying about something a billion per month, like
Yeah.
1 billion per month. And but like, how is that even possible? But yet they're still able to make such margin.
Yeah, and then when the numbers come out and you see that they're
Yeah.
doing 80 billion in revenue, it's
Yeah.
like, oh, okay. Maybe it makes sense. Maybe it's starting to make sense.
Yeah. It's crazy. Yeah.
And so, and I guess the next question then. So we, look, I know where I'm standing there. I see that it's going to continue. But I think the question that does become interesting though is, and you started to allude to it when you started to talk about the model providers from other countries who, will engage in a race to the bottom to an extent. In terms of the split of that return, so the split of that margin, how do you see the trajectory of that between the compute chip power providers versus the model providers over time? How do you see the split going?
I think that figuring out how that's gonna go, I think is a hard one.
Yeah.
But just looking at, if I'm just taking the data points we've had so far, I think the model providers are gonna eat the best.
Okay.
Yeah, because I think they're able to. So one, for example, with the chip providers, I think because they don't necessarily have as much, what I say, as much that they're spending on.
Yeah.
They don't have so like whatever margin they're making is just profit. Like they've just been able to 10x their profit for no reason. Like I think they're more is less likely that they keep just increasing it ridiculously. Because obviously if they know that if it gets too expensive and it's not affordable, then the whole thing crashes regardless. So I think they're likely to keep their prices while they're making ridiculous profits. They're likely to just stay satisfied at some point. And I think that's similar for even power and even for the compute. I think the model, they have more of a what I say, the way people see them is easier for them to just like say, oh, you know what? Because people don't understand like exactly how much you're spending on. It's easier for them to just say, you know what, this model we've brought out does this. And that's like new capability that we've not seen before. Like the chips aren't really, there's no, the chips is same chips we're bringing, obviously with marginal increase. You can't really say, oh, this is like a new chip, the price has to go up. If you're increasing the price, it's really just because of like demand. But with models, you can say you're bringing this much more value with each model. And then you can say, yeah, logically, it makes sense for you to pay this much more than what you're paying for this other model. So I think they're able to steal more margin, even if it didn't cost them that much to make it. They're able to say, yeah, look like. And so sometimes I haven't read somewhere else saying that like sometimes people see like, oh, you want to use a cheaper model to save you money, but at the end of the day, you end up spending more with cheaper models sometimes.
Jevons paradox.
Yeah, because the good model just solves it immediately.
Yeah.
The cheaper model, you're burning tokens and going round and round and round. You end up spending even more, fixing bugs, fixing this. The more expensive model, it's just done it once. And then you see why people would want to go for like the more expensive frontier models.
Yeah, and I think my only slight counter is on the chip side, they do have measurable outcomes, right? So if they can prove that their cost per token effectively, or the even better would be the cost per task, really, like the actual cost of it, that you have to spend to get things done is reducing.
Training and inference.
Chips. Yeah. Then I think you get to something relatively interesting. And I think then they can continue to justify higher
Increase.
prices on the chips, because ultimately the return that you get on each task is higher because of the performance improvement.
Yeah. But I also wonder how much, I mean, we say this all the time, but we keep like getting wild with new technology. I wonder how much really with like the current, how the current technology with the way they've been able to squeeze out performance from chips. I wonder how much more performance squeeze they can get with newer generations. Because I've seen people say like there needs to be a new, with the way silicon came, for example, that was like a breakthrough. There needs to be another breakthrough within the next like 2-3 years for that to keep being the progress I'm making with chips. Because they keep reducing nanometers and reducing all the like trickery and everything. But at some point we get to like a physical limit with how much improvements we can make to those chips. And there probably needs to be another like technological advancement to like blow past that.
Yeah.
I guess if that happens, then it's done. But
yeah, I hear that. I hear that. There is going to be a. I think what's interesting in the way that you frame that though is that you think we're closer to that upper limit in the computer chip layer than we are at the model layer.
Yeah. I think so. Because there's been nothing to prove that we're close to like the model limit.
True. I mean,
every time we're like, oh, GPT-4, like GPT-5, like Fable, like we keep getting blown away. But with the chips, we're seeing like steady, like there's like trickery they're doing. They come up with this architecture, but it's not like a new, like crazy advancements.
And that's on the demand side. And I think on the supply side as well, when I look at the model layer, my only thing there is that everyone keeps arguing that open source is going to be able effectively to commoditize on the model layer. I still am in a place where I genuinely believe there is a 10 or 20% of new capability that will always require that frontier investment to do new. And those tasks are going to be higher margin because they're unsolved. So that's, I hear that. The only flip side to that, I would say, is I think the barrier to entry for a company that's going to try and compete at the chip layer at scale is almost insurmountable. Whereas the barrier to entry of the model layer, it's going to require a lot of funding, but kind of IP, resources is probably more doable to replicate what, an OpenAI or an Anthropic or any of these LLMs in terms of the interface and UI and whatever as a product versus creating a next
creating
GPU or CPU.
Creating a new fab.
That's a wrap.
It's no way. There's no way.
Okay, man. Well, look, I think before we round off though, there was one more question that I think we want to get into, which is let's call it a kind of optimization problem. Right? Let's get a little bit mathematical.
Okay.
So let's say you're Sam Altman. You're the founder of an AI. Or you're Dario, the founder of Anthropic. The question that I'm sure is keeping you up the most is, how do I allocate my spend across inference? And so, again, explaining that for anyone who's new here, inference is effectively allowing the models to be able to run and produce fast answers for people who are interacting with them now. So think when you use a GPT or Anthropic, having the capability to respond relatively quickly to questions and complete tasks relatively quickly, versus training, which is when you're ingesting huge amounts of data to be able to develop a new capability with AI. Hopefully not an oversimplification, but for the purposes of this conversation, that's your inference versus training split. The problem, so to lay out the problem, is if you spend all the money on training, you're not getting a return on that because you're just training the model to get better. You're not really charging any customers or businesses for that value. But as a frontier model, if you spend all the money on the inference side, which is just effectively run costs for your products, these open source boys who are lurking behind you are getting closer and closer to you every day, competing away your margin every day. So how do you think about the balance between investing in new capability and training versus investing in inference, which is giving you a return today?
Yeah, I think that's obviously a problem that is a really hard balance. I think from what I read recently, I heard that like currently OpenAI is the compute capacity is currently 25% inference. So
25.
25%
Okay.
inference. So the queries you're making to ChatGPT every day, or your queries and like answers and responses and everything you're doing, is just 25% of their computes. And I think this is even more than what Anthropic has. So it seems Anthropic has, I would confirm this, but
Yeah.
just in case I'm a bit off,
Yeah. Yeah.
but I think Anthropic has even less inference. And they're spending, obviously that means more than, that's more than 75 right now, 75% on training. And so obviously the problem here is like you want to have enough capacity to like be able to respond to people. You want to have enough capacity, obviously, which also even means you need to be able to make your money. Like once your capacity is choked, then you can't make as much money. The more space you have, then the more money you can make. But at the same time, you're scared that like if you don't spend as much training, your competitors are going to leave you behind, and you're not going to be able to compete. And I think right now, both major players are spending way more on training. And I think because there is the belief that maybe someone is going to get to AGI. Like if AGI is what matters eventually, then whatever you're trying to make now does not matter. Like whatever money you're making now does not matter. If they hit AGI, that's it, it's a wrap.
And
It's a wrap.
just again, for anyone who's coming at it cold,
Yeah.
what's your definition of AGI?
So AGI is, I think the dictionary definition is artificial general intelligence. But I think for me, I would say this is a thing is, I wonder if AGI is in the form that we interact with LLMs right now. I think it has to be something else. I don't think it is a really well. I guess it could be a really smart LLM model, but it has to. I feel like it has to be able to have more physical capabilities. I think it has to be an interaction between perfect sync between amazing model and a hardware that is perfectly made to match this. And so the idea is like obviously once you get to AGI, that's a model that can do anything basically that is smarter than a human. And obviously models are right now are probably smarter than most humans. But but there is little things they will trip up on. They cannot help you bring water from the kitchen and like do more physical world things. But if there's a general model that has like general intelligence on anything and everything, for example, the way models trip up on spelling like strawberry, like they trip up because of how LLMs are trained. But a model that actually knows everything, I won't trip up on silly questions. I think he also needs to have like some physical capabilities to be able to actually like interact and do real world things, because there's some things that you can only answer properly or like explain properly if you're able to feel and touch. Like, okay, what exactly is that? You want to ask it, what's that? Can she be able to like feel and touch it? But yeah, back to what I was saying. So I feel like right now the both companies are obviously focused most on training, and they believe like whoever gets the AGI first takes the whole cake. Like they squeeze the other person out. And it's tricky to say like, okay, exactly how much should they spend, because they've been raising a lot of money. If they did spend less on training and more on inference, they would have more money to come in to power the training they need to do. I think it sounds like a good balance to me. What they've got so far, either 25%, 75%. I think it does sound like a good balance. I think you definitely need to focus on training, because, like we said earlier, like we have not seen any indication that we're even close to like the upper limit of what models are capable of. Even if there's no AGI, we've not seen any indication that maybe like this is just a few like iterations better. It can be double and double and double. Like at that point, you can't come and say, "Oh, I never knew." Like no one's gonna hear that.
Yeah, the thing is, I read it was a little bit more. I read that the early in the year it was like something like that, where it's around a quarter or so of the spend effectively that is going on inference.
Yeah.
But I read that as the year's gone on, the mix has shifted more towards inference for both of them.
Fair enough.
So I read that for OpenAI and Anthropic, it's more towards 45% that is going towards inference. And I think that's probably for a couple of reasons. I think if I think of their two biggest stakeholders right now, is probably their customers and their investors. I think their customers you see it when you go on any of these, you go on Twitter, you go on TikTok, you see anything, they're all complaining, saying, "Oh, Fable locked me off after 3 requests or whatever it is," and they effectively they ain't got enough tokens to go around for everyone. So I think on the customer side, they faced immense pressure to increase the mix of effectively the availability of AI to people. Again, trying to sell enterprise, it doesn't really work if you're trying to tell them you pay this much, but you're going to run out before you can complete tasks. It's just not really going to work. So I think they faced that pressure on the customer side, and then you touched on it as well. In the investor side, inference is where you make all the money and the returns. So when you've raised, before they were raising a few billion, when you start to raise 30 to 40 billion, quite quickly, you need to see that revenue shoot up to, towards 100 billion pretty quickly at a minimum, or within the next year or so, you're going to start to face some serious financial problems as a business. So
as an investor, it's also tricky as well, to be fair, because as an investor, you want your investment to be the one that's going to come out eventually. So would you take the quick gains, or would you tell them, you know what, I understand, like, let's keep investing in this, like.
So I think for the frontier, and this is where it's really important as to where you position yourself in the market. I think if you're one of the frontier guys, if you're OpenAI, you're an Anthropic, you have to be able to demonstrate that you can do things that others can't. For you, it's literally an existential crisis if you cannot, because you're much more expensive. So I'd make the case that for them, the mix needs to potentially be more towards 75-80% towards training. I think on the flip side, if you're, as I said, if you need to get to 100 billion, 200, 300 billion to justify your valuation to keep the cash coming in, you might argue that actually getting towards 40, towards 50% may be what they need to do in terms of inference to be able to have, a sustainable future. So it's a continual problem. Where I think we're probably going to land is that, and I think that's about this moment of a breakthrough of AGI. I can't envisage it. I don't know if we're going to, if you've been talking about it for years, and I don't, even with mobile, was there, it's more like rapid iteration. Who knows? Maybe we'll see that there's a specific breakthrough moment at AGI. But for me, when I look at it, I kind of look at it and go, they're going to have certain revenue milestones that they need to hit in order to continue to exist. Break down your split so that you can hit those revenue milestones.
Just get there.
Well, yeah, whilst also, leaving enough cash to be able to invest in the future. Yeah. That would be how I think about it. Because I promise you, if they go to the IPO and the numbers aren't right, people talk about a bubble, or you will see a bubble of epic, disproportionate levels. Yeah. If they go to IPO and the numbers are not right and the margins are not right, and people are starting to question the return, you can forget about the whole thing. I think
it makes sense why, like you said, this year they've probably increased inference. Yeah. Because now they're working towards IPO. Yeah. Now it's more important that the books look good. Yeah. And then after the IPO, then they can now figure out, okay, you know what? They've got some money in now. Maybe we can shift it up a bit more.
But even then, you say that, but it's hard because now after they've gone public, now they need to report every quarter.
Yeah, true.
So it's it's a good problem to have. It's a good problem to have.
Because you don't want to report the next quarter and you're making less than.
Yeah, the margin's going down now.
That's not good. The stock will be tanking. Yeah.
All right, man. Look, we could keep exploring this one forever, man. We're gonna have to wrap it up there for episode 1, man. Yep. But look, takeaways: the market, the economics of AI as a market is shifting. I think we landed on it's highly possible that the margins at all layers of AI continue to increase and the revenue continues to increase. Yep. Let's see who wins the split between the compute providers and the model providers. Yeah. And let's keep praying for those guys trying to balance inference and training.
Let's keep them in your prayers.
All right.